That is the image that most business owners have when they first join the exclusive VAT Club. And when I say exclusive, there are over 2.7 million people who are in the system in the UK to actually administer VAT on behalf of the UK government, commonly known as HMRC. VAT is a very popular tax around the world. In the UK alone, it generates £132 billion worth of tax receipts. That's 132 with a lot of zeros following it. In other countries, it's known as sales tax. And in this video, in this broadcast, I'm going to go through why, in my opinion, VAT is such a brain squeeze, and looking at 4 key areas that those who are entering the club, those who are within the club already, what the 4 key things are that you need to remember and you need to focus on. And folks, before we jump into that, before we dive in and have a deeper dive, why don't we get some music just to get the old blood vessels opened up and get the blood circulating. Welcome back to the stream. What's going on here? There we go. Right. There you go. So folks, sorry about that little faux pas. This is what happens, by the way, folks, when you have too much of a gap. I didn't do a live broadcast in the last couple of weeks here, and this is what you call being rusty here, even though I had some rehearsals here, a little bit of a trip up here, but we are, as they say, back in the room. So my name is Mahmood. I'm an accountant, have been for nearly 3 decades. I run 2 businesses. I run a business called I Hate Numbers. The aim of the business is to actually improve people's financial awareness, help them make more money, save tax and time, and actually help them with a battle that goes on between the ears, which is as important running a successful business as it is having wonderful technical skills. Now, we talked about VAT. It stands for value added tax. It generates an incredible amount of revenue for the UK government, but there's a lot of misconception, a lot of brain squeeze that goes on, and it's a very confusing tax, or it can be. In theory, when it was introduced, it was meant to be quite straightforward. So I think the purpose of this broadcast is to have a look at it, dive deep. It's less so on the technical rules, by the way. That can come for another broadcast here, but just to make sure we lay the foundations, lay the building blocks of a good, competent body of knowledge that we need to operate successfully and to stop ears exploding and burning with what our perception is and dealing with VAT. If you're joining me on the broadcast, thank you very much for your time and your company today. If you want to put hashtag replay in there, if you've got any comments, feedback, thoughts, then put them into the comments box. I can pick them up accordingly and respond as such. So what are we going to be covering in today's broadcast? Well, by the power of magic, apart from our little friendly goblin that we've got there, this is what we're going to be covering during this session here. So there's 4 key areas I think are really important that business owners need to be aware of when it comes to VAT. First of all, the actual mindset, the philosophy, the approach, how you should look at VAT and how you should not look at VAT, and things that might have to change. We look at pricing, so what you charge your clients, what you charge your customers for your products and services. That's potentially quite a big change that you have to think about before that magic moment happens. We're going to think about the planning aspects, and we're going to think about the process here. So in terms of what is it that changes in your business, what is it that changes in terms of how you do things once you enter that threshold. So that seems to me like a pretty good sort of overview of what we need to cover. As I said, if you've got questions and comments that you want to share, by all means, please add them into the comments box. Add that hashtag replay. I think that's the mnemonic that's usually quoted. So folks, let's crack on with the presentation. Now I'm going to take myself out of the stream slightly. You're going to hear my wonderful dulcet tones, but just to make the thing more visual, then I'm going to share the screen with just some images and presentations as such. I can keep an eye on the comments box, obviously, as we go through. Now, before we dive into the mindset and the pricing and the planning and the process, this is something that all business owners need to do when it comes to VAT, and you need to keep an eye during the course of the year of what's going on with what you're selling, because we are talking here in this situation where a business owner has to, so it's obligatory, it's compulsory. The rules say once you get to a certain situation, your business must register for VAT, and once you register, you're in the system. You then have certain obligations, certain responsibilities, and this is where all this 4 quadrants come into play about how you've got to think about VAT, how you approach your pricing to your customers, how you go about planning, what changes there, and the processes that you must adopt. So there's always an ongoing responsibility, and that's effectively, you need to keep an eye on the value of what you're selling to your customers, because once you get to a certain situation, then it's a must do. There are grounds, by the way, that actually some businesses may wish to volunteer, I know that sounds a bit crazy, volunteer to be part of the VAT system. So there are situations where it's advisable that you as a business actually volunteer to register for VAT, and I'll comment on that towards the end of the broadcast. So what is this situation that we're talking about having to monitor? So let's take myself out of the stream. Now, hopefully that's a good visual there. And what we've got 3 or 4 aspects on this wonderful little line chart that I've sketched in. Now, currently in the UK, there's a magic threshold limit, currently £85,000. Always keep an eye on these things, folks, here, by the way, because HMRC, the government, have the right to alter these figures as they see fit. So across the board, we've got this magic figure of £85,000. Underneath, we got months of the year mapped out, and I've started in this particular chart from July 21 onwards. And the figures in green, by the way, are just some made up numbers, obviously, for a business that as they're going through, that is what they call their rolling 12-month perspective. So what do we have to do? So let's assume we start in July 21, and I look at how much I've sold, the value of what I've sold over the last 12 months up to and including July 21. That's going to be between effectively August 20 and July 21, and my total sales are £65,000. Now the line above is the VAT registration limit. I'm below that limit, so I don't have to worry at that stage about registering for VAT. Everything's fine, relax, carry on. Now the next month, August 21, I look at the last 12 months there, and I think, okay, based on what's been going on between September 20 and August 21, I've generated sales to the value of £69,550. Remember, these figures are purely made up just to illustrate. I'm below the VAT registration threshold, nothing to worry about. And I continue that exercise. Now, as I get up to, say, March 2022, I've looked at my last 12 months sales. It's just under £79,000 between April 21 and March 22. I'm below the VAT registration threshold, so everything is fine. Now, as we go on, we suddenly find when we get to June 22, the level of sales that I've generated there are such that, okay, I'm hovering closer to that deadline, so my business is doing well, I'm getting higher value customers, I'm selling more of what I do, maybe I've changed my prices, but actually the value of what I'm selling over a 12-month period is increasing, as one would expect for most businesses that decide they want to grow. Most businesses, even if they just keep up to maintain themselves, will alter their prices, so you'll find the value of what you're selling will increase over a time. Now the key thing is here, by the way, this has got nothing at all to do with how much profit you're making, what your costs are. It's purely the value of what you're selling. Now what we're noticing as time goes on, we get to about July 2022, and now we've breached the threshold. So the value of what we've sold over the last 12 months up to and including July 22 is such we're over the VAT registration threshold. The first warning light goes on. And what that means is, because we breached the threshold, we need to make sure we inform HMRC typically within 30 days of that notification period. So we will then, once we've completed the registration process, we will then be registered effectively from the 1st of September 2022 onwards. Now folks, if you want to check out the website I Hate Numbers, if you want to go into the news section here, we've got bundles of free stuff there that tells you what you need to do and how you need to register. So don't worry too much about the technical aspects, and there's 2 or 3 things that we can draw from this. Number one, you need to make sure you've got a system, ideally digital, that can actually keep a track on what you're doing in your business. So what's the value of what you're selling, and you need to be able to track that and keep a careful eye on it. Now if your business is quite flat, you're never going to go above 40, 50, 60, 70,000, and that's never going to happen. That's fine, you can relax there. But again, have a good system that you can keep an eye on what's going on. Life can be such that it runs away with us, and before we know it, we've exceeded the threshold and lots of naughty things can happen. You could get fined, you will effectively pay penalties if you're late registering, and it's going to create a whole mess of things with your customers and your suppliers. So keep an eye on those things. And anyway, having a good digital system is not only good for compliance, but it's good to power your business and really make some powerful decisions. So that's the first thing we need to really have as an ongoing situation, is when is that moment in time that we have to register for VAT. Over the last 28 years, I've dealt with a variety of businesses, large, small, medium size, in a variety of industries here, and there have been occasions when those businesses have not necessarily, shall we say, got their record keeping system up to speed. Life intervenes, they're quite busy, and you get a number of late registrations. We don't want that, it's not a good look, and also it creates lots of problems, and also it can be financially kick in the financial wallet, which we don't actually want for you. Let's take that out and let's get back into what we are continuing with. So having said that, that's the first thing. So make sure you keep an eye on it. And let's assume that wonderful day arrives, you're registering, you're in the system here, and now what we need to look at is so what. So there are 4 aspects to consider, as I said. First of all, there's a psychological change, there's a mindset change that we need to think about when it comes to VAT. Now the first thing is, for me, lots of businesses that I encounter, lots of businesses that I help and support, some will see it as quite a negative thing, and it's a bemoaning thing there as well. For me, I see that once you become VAT registered, it's actually an indicator of your success. What that means is your business is generating value in terms of turnover, it's generating enough sales that you've got to that stage where you enter the next stage of your business growth. You become VAT registered. So I would see it more as a marker of success to begin with. I'm not saying it's not without its challenges, but it's definitely, for me, an indicator of a progress there as well. Now, fundamentally, the next thing you've got to remember is that your role in your business changes. You now become an unpaid tax collector, and you join approximately 2.7 million people who've also got this role, this responsibility. You don't get holiday pay, by the way. You don't actually get rewarded. You don't get any thanks from HMRC for being an unpaid tax collector. That's just unfortunately the role that's put upon you. Largely, HMRC rely on the 2.7 million people to administer the scheme on their behalf, to be those tax collectors, and to, which might sound quite erroneous, to understand what the rules are. Typically, ignorance is no excuse in the eyes of our wonderfully cuddly people at HMRC. Now, not only do you have to become a tax collector, you also have to make sure you keep adequate records. You have to have things where you typically once every 3 months, a return, a form will be completed which captures your information for VAT, and we'll submit that off to HMRC. I'm going to talk about that more in details when we come to the process part towards the end of this presentation. Your planning cycle, your planning approach is going to differ as well. So again, one critical thing I would always advise all businesses, whatever their size, is that you must do what I call a cash flow plan. It's a real essential navigating tool to actually help you charter very choppy waters. So your cash flow plan, your financial plan, your budget, critically, the cash will include the money that comes into your account, the money that goes out, so you'll include them obviously inclusive of VAT. When it comes to working out things like profits, then obviously there's a different take on that. So again, that approach to planning will take into account now the extra burden, the extra responsibility of VAT. Your approach will be different. So how you organise your records in your business, how you structure things in your business, again, will be completely different. And remember, you are effectively, whether you are a sole trader, a partnership or a limited company, you are working for that business. You are effectively, not in legal terms necessarily, an employee of that business. Now here's the VAT cycle, as we call it. And let's just put myself in the stream there for a moment. There as well. Okay, let's all these weird things I'm trying out, and let's go back to that one. Okay, just indulge me folks here while I play around with these little settings. So effectively, here's what happens. The actual VAT cycle, so you are the business. In the center, you will be buying in goods and services, and you'll be selling those goods and services on brackets, providing services to your end customer. So look at it this way. Let's look at a couple of examples. So you happen to be a retailer. You're selling goods, you buy in those goods, you buy in services. So for example, you might engage freelancers to help you with maybe your marketing, maybe your advertising. You might outsource some of the HR. You might have wonderful people like I Hate Numbers who will help you supporting your business by providing valuable information, advice and support. So you've got accountants fees coming in there. You're going to be buying those goods. Now, all those different suppliers, some of them may be registered for VAT. Some of them may not be registered for VAT. Now, when they provide those goods and services to you, they will be charging for that. Now, when they charge for that, they may, from their perspective, be charging you VAT. So when you get that receipt, when you get that bill, when you get that invoice from that supplier, there may or may not be VAT. And if there is VAT that's being charged to you, that's VAT that's called, let's give it a nice technical term, input VAT. Now, when you provide your goods and services outwards, so when you come on to sell off that product that you've bought in, then you will be charging VAT typically on the value of that supply. Whatever your price is to your customer, VAT will come about that. And that's going to be output VAT, as it's called. Now, if you imagine a seesaw, the VAT that you charge to your customer, take off the VAT that you've paid over to your suppliers. The difference is either paid over to HMRC once a quarter, or you have the potential to claim some of that back. So that's the typical cycle. If you're a service business, you're providing your time, your intellectual property on, you're going to be charging VAT on that service typically. You will have goods and services that you're buying in. There'll be VAT charged on that. The difference represents the VAT that's either paid over or you get back accordingly. Now, this is not the time and place to actually go in the myriad of different situations here. We're talking about a general framework that you need to think in terms of. Now, one housekeeping exercise I would thoroughly recommend is that when you have that scenario going on, that make sure any VAT you're collecting, offsetting, put it to one side, put it into a separate bank account. It doesn't belong to you, and therefore you won't confuse that and have that buried in with your normal day-to-day bank balance. Put it to one side, and when the time comes, you can pay it over to our friends at HMRC. Now, pricing. This is something that really is probably one of the more challenging exercises, if I can get my teeth in, that really faces most businesses when it comes to VAT. And typically, what you need to think in terms of, first of all, is what type of customer do you actually have? So if we imagine, typically in VAT, there's two groups of customers that you can have. I'm just looking at that. What do I like? Do I like being in the stream? Do I like being out the stream? It's a tough one, folks. So I'm just going to take myself out the stream for now, just so we can see more of the image. So if your customers are what are called B2C, so they're consumers. Now, consumers doesn't mean just an individual. It's anyone that you provide your services to or your goods that themselves aren't VAT registered. So typically, if you're selling goods and services and it's individuals buying them for personal use, then obviously they're not going to be VAT registered. If you're selling it to a business, so you might be providing things like marketing services, you might be providing accounting services, you might be providing training services, memberships, whatever, and your end client typically may be a sole trader, small self-employed business, they may be a charity, they may be a not-for-profit, that isn't actually registered for VAT, and they will be classified as B2C. You may also have in that mix a number of clients that you're providing goods and services to that themselves may be registered as well, and that is what I call a B2B transaction. Two aspects to consider when it comes to the pricing. Typically, when you're selling in terms of what I call B2C, when you're publishing prices on the website, typically, as a rule of thumb, people publish those prices which includes the VAT that you're charging. Now what that means is, if I'm selling, for example, a membership service to somebody and the price of that membership is £120, well, if it's within that £120, if that's the headline price and I'm registered for VAT, out of that, 20 quid of that is I have to take away. It doesn't belong to me. I have to pay that over to HMRC, less any VAT that I might be able to offset. If I'm selling B2B, typically I would publish my prices ex VAT, so I will say it's £100 plus VAT, because I'd be more relaxed in the fact that that business that I'm selling to is going to be able to claim the VAT back. Fundamentally, B2B transactions are neutral for profitability, and if anything, they're likely to make you more profit by selling B2B if you're VAT registered. If you're selling B2C, that's where the challenges come in, because once you become registered for VAT, you've got three options to consider. Number one, do you increase your prices so you don't lose out margin wise? And that means that you might lose out in terms of the sale that you make to that client. You become suddenly 20% more expensive. If your main client base is not for profit, charities and the like, once you become VAT registered, then your prices will have to go up, ? To compensate accordingly. So that's a good question, and it's a good way to review your pricing, review those relationships. You might wish to change the composition. The alternative is you absorb that cost, that price increase. Again, that's a decision you've got to make in view of your business objectives, or you might decide to share some of the pain with your end client. On an aside, in terms of the world of being naughty, a lot of tradespeople, not all of them, some tradespeople, for example, will effectively do cash jobs so they can avoid adding on VAT, because the domestic consumer will be charged 20% extra if a bona fide illegitimate invoice is raised. As a small footnote, folks, by the way, if you do that, that's actually a criminal offence. It's money laundering, and if caught, you can actually go to prison as well as paying fines. So I'm not condoning it. I'm just saying I have come across situations where that has happened. Again, run your business properly, and if you navigate it correctly, you won't have to end up breaking the law. So again, a definite not condoning, but just be conscious of that problems that can occur. Now, VAT also affects the profitability. Now, generally speaking, you are going to be encountering two types of profit. You've got your gross profit. So if you're a retailer, you're buying in goods, you're selling them on, you make one level of profit. You then got support costs, overheads, expenses, take your term. So things like rent, paid wages of staff, rates, marketing cost, etc. Those will be your support costs or overheads if you prefer. Now, if you're B2C, that's where the challenges lie. And you've got to really think about how you communicate that to your membership, how you communicate that to your clients, how you communicate that to the end user about a price change. If you're B2B, the challenge is less so, because it's effectively going to be neutral in profitability, and if anything, you are likely to generate a greater level of profit as a result. Obviously, I will do a little plug there. So let's get that back in there. Folks, a lot of these issues as such, I'm just going to give you a little plug for a book there called I Hate Numbers there. Obviously, I would recommend it. What a surprise. And I want you to be aware that if you are going to want to access more free resources, more information, more material here, then I would obviously recommend that you folks subscribe to the YouTube channel. There's a bunch of resources on there to actually dip into on VAT and other such matters. Let's just have a roundup of what we've said so far. So we've got a situation that if you enter that VAT territory for the first time, or even if you're in the mix here, remember your role. You are an unpaid tax collector. You get no credit for it. You get no holiday pay for it. You get no reward, but it's a responsibility for you. It's a marker of success, in my opinion, that you've got to that stage where you become VAT registered. You can obviously limit the value of what you're selling. You can limit what you're doing, but obviously that's going to limit your growth, which is not necessarily a bad thing. That's going to limit how much profits you make, and effectively that's going to limit a lot of things that you do if you want to stay deliberately below the VAT threshold. There are other ways to plan your business, to restructure, to structure it such that you can avoid that. More of that in a future topic. But again, we've got a nice little framework here, and the biggest challenge I would say for most business owners when they become VAT registered is to review and examine the pricing, review it and examine how they communicate that to their clients, review how in their own minds how they deal with that on a day-to-day basis. And processes mean that you need to have good systems, and VAT does impose a stricter discipline on business owners about how they keep their records, how they submit information. But actually it's the next step for me, as I would look at it, in terms of how you develop your business journey as well, because that means with stronger systems it gives you much better valuable information. You can plan, you can grow, and these things are very navigable itself. I'm not sure if that's the right term, but it's one that I'm going to adopt. So folks, I hope you got some value out of this short broadcast today. Let me know what you think. I will be back next week. If there are things to be covered, by the way, that you would like me to have a look at, obviously I've got a content plan. I'm more than happy. Drop me a line, drop me a comment here. Anything that's in terms of that financial planning space, tax and the like. If there's something in particular that you want me to look at, then put it in there for my consideration. And folks, until that time, enjoy the rest of your weekend. Reflect, bask in the knowledge of VAT. If you want to check out some more resources, then by all means, check out the I Hate Numbers site and also the Numbers Know-How site, which is their financial story planning platform. Until then, let me get my teeth back in. Have a good one.